All right, a little intimate bunch, but this is going to be recorded and we'll be sharing this. First, thank you guys for coming in. Especially thank you, Tara, for making the trek here. So Tara is with retired.com that has a whole suite of I'll let her give you the description. The goal here is for us to continue to provide value especially for those that are local, take advantage of our new facility and just provide events and different opportunities for us to, one, get some education awareness of all the different ideas and options that we have in the investing and wealth journey world out there, and then give you all an opportunity to connect independently. By all means, if you leave and you want to reconnect with somebody that you spoke to, just reach out. And then, as long as there's not a big collection of spam going around, I think we can share everybody's contact information. Without further ado, let's connect it and give it over to Tara.
Thank you, Sergio. I appreciate it. So this is an all skate, which means everybody participates. Who has a retirement account? Raise your hand. It's like a huge room. I can't even count the hands. Everybody. Is anybody already doing like self-directed IRA investing? Lovely. Okay. So it's not the most exciting thing to talk about, like IRAs in retirement, but so I'll do my best to try to make it exciting. A little bit about me. I'm with a firm, like Sergio said, retired.com. And our goal is to kind of just bring multiple worlds together so that you can do multiple things under one roof inside of your retirement account. If you were to go to retired.com, you would see a slew of brands. One of those brands is Rocket Dollar. Rocket Dollar currently hosts several clients that are investing in the Hearthfire assets. And so I wanted to focus on the Rocket Dollar piece today, but we also have Bitcoin IRA, Choice, Digital Trust is the qualified custodian that all of that sits on top of. But Rocket Dollar is solely focused on the individual IRA investor. And so you can take any of your existing retirement accounts or just create an IRA out of thin air. So I'm just going to give an overview. And if it's boring, I apologize. I don't know how to make IRAs super exciting other than to bring my stellar personality to the room with it. So what is an IRA? I mean, that's important, right? It's just an individual retirement account solely specifically for you. So it's not a multi-participant plan like your 401k or anything like that. Anybody can have an IRA as long as you have U.S. income. If you're an expat, you can have an IRA as long as you still have your U.S. Social Security number. And we have a lot of people lately, it seems, that do that and have their retirement account. You can contribute. This is a little dated. So the new amount is $8,000. So you can, well, $7,500 and $8,500. So the bottom is off. So you can contribute that year over year into an IRA to grow your wealth there. A lot of people hear self-directed and they think that that's like the checkbook control model. And so there's this layer of complexity with like an LLC and things like that. But IRAs have been around since 1974 and every retirement account is self-directed. You're just kind of at the mercy of what the custodian you're with allows you to hold or not hold. So for example, Schwab, TD, Fidelity, stocks, bonds, mutual funds, ETFs. So then there's places like Digital Trust. There's others out there that specialize in alternative assets. So that's anything that's more esoteric or that's not just like the standard stock exchange. Fidelity will hold private funds, but they usually have to hit a pretty high threshold for them to agree to hold them. And usually the underlying investors are just accredited high net worth individuals. So it really opens up the investment world for like normal people or the majority of the population. IRAs shield you from capital gains tax. So any investment, you can just kind of forget taxes while your investment is inside of an IRA. So these are just some examples of different types of things you can have inside of your IRA. You kind of get this idea of like you're the bank and you're directing your funds where you're comfortable with them going. So that's so exciting. So we hold all of these types of assets at Rocket Dollar and underneath the retired.com umbrella. And so you can get really creative. Like I was telling Sergio, we have a client that is a retired firefighter. So he bought fire trucks in his retirement account and he leases them to a city in Colorado. And that lease check comes back into his IRA every quarter. I'm from Kentucky, if it's not super obvious. And we have a farmer who has bulls and he studs them out. And every time he studs them, the lease fee comes back into his IRA. So you can get really creative when it's structured properly and you're not doing it under any type of prohibited avenue. We'll skip a poll pause. All right, there's only the better way to look at it is it's more like what can't you hold, because that list is much smaller. So you can't hold antiques and collectibles, you can't hold S corporation stock, and you can't hold insurance. Outside of that, fire trucks and bulls, real estate and storage units, you can get really creative on how you're directing your retirement account.
What's the rationale for not being able to hold collectibles? Is it because they don't generate cash, or what's the thought process?
It has to do with the valuation of an asset.
Okay.
And so you have to be able to pull a public valuation.
Okay, so
asset.
that is okay. So a quote unquote art, like was art on there?
Like if it's, yeah. So we got into this big debate in like 2018 when like NFTs kind of gained traction in the crypto space. And are they considered art and collectibles, or can they be an investable asset? And so that's not for me to determine. So it just depends. Like a Van Gogh, you can't, you're not going to put Van Gogh in your retirement account. That's a highly collectible piece. And so we have to be able to pull a public valuation at the end of the day.
Okay.
And so some people get a little creative in that regard, but I don't dive too deep into that discussion.
Well, so I mean, how would you? All right, so I'll take probably bad example, baseball cards, where there is. I'm going back from when I was a kid, right? There's a Beckett book that has values in a national publication. There are appraisers, right? When they say public valuation, like, I mean, you can make the argument that supply and demand is what values real estate.
Right.
There's not a public valuation.
I have a really good one-liner for this, but I can't think of it right now off the top of my head. I'll circle back with you because I have it like at home about the valuation piece.
Okay.
So if we could just bypass it, because
Okay.
it's kind of convoluted. I'll follow up with you on it if that's fair enough. Okay. So like with crypto, we can pull that from the exchange. Stocks, bonds, you can pull that from the NAV. So I think it has to do with how they're valued.
Okay.
And the compliance person gave me a super sweet answer to that, but I don't know right now.
If you hold a property in your eye, you talk about property valuation. How do you get the valuation? You have to go and have it evaluated every year, or you
real estate every 3 years.
Every 3 years.
Yes, and usually with an appraisal. However, most recently they will take a Zillow or a Realtor.com valuation. At the end of the day, with it being self-directed, like you, the IRA investor or IRA owner rather, are responsible for providing that valuation. Your custodian's not we're gonna request that you update it. We're not gonna hunt you down. Like it's up to you and your tax or financial professional to determine what that is. And then you supply that valuation to us and we update the account.
So with, we have quite a number of investors that have investments with us through their self-directed accounts. And in many cases, they're requesting values every year.
So they will send a valuation every year. We're required to do that. We'll send out a letter every November. But like real estate, like physical residential real estate is every 3. Because your assets are listed as a private equity.
Oh, I see. It's a
that makes it
security,
a little bit
more
different,
of a security. Gotcha. Okay.
Yeah. Gotcha. Okay. And then we do have like some, like if you guys provided that as a firm to us, we would just update across the board your client's holdings. But most of the time it's the individual. We're sending it out to the individual. So, all righty. Different types of alts IRAs. Everybody's probably heard of traditional and Roth. Some people may have heard of SEP, inherited or minor IRA. There's also what's called a simple IRA. And they all operate the same. No capital gains taxes, tax deferral. They're not a brokerage account, although you can hold a brokerage account inside of your IRA. The difference is like how they're taxed, traditional versus Roth, and we'll get into that. If the button would push. There we go. This is a loaded slide. I didn't make this, by the way. Anyhow, so what types of IRAs do most people use? Most people have a 401k, and so most people roll over to a traditional IRA. It's becoming increasingly popular to do kind of what people call the backdoor Roth conversion. So that's taking your traditional funds and converting them into Roth funds. And so that way, you know, you're paying taxes up front and nothing on the gains, especially in the crypto space. That's huge right now. Roth IRAs, tax on the front end, no taxes when you take it out. Traditional IRAs or traditional retirement accounts, no taxes up front, tax on the back end. So does everybody understand? Does that make sense to everybody? Everybody?
There's also a, is the contribution or amounts the same?
The contribution amounts are the same for Roth and traditionals. SEPs and simples are higher. 69,000, I think, is for the updated SEP amount and solo K amounts. So if you have those, you have to be a business owner, and then you can have those types. But right now, it's just that $8,000 into the Roth. And if you have 5 IRAs at 5 different custodians, then you can only contribute that total $8,000 across the 5. It's not 8 into each.
Let me ask you this regarding the SEP and solo 401k. How do you define a business owner? Meaning, like, if Haven had a side business doing X, Y, and Z, but still has a full-time job, he sets up an LLC. Does that qualify him as a
Yes.
business owner?
Yes. Do what? Right.
But if you had a W-2, that doesn't disqualify you from also having this.
It's a sole ownership on the SEP. Like, you're the sole owner. You don't have any other employees. Your spouse can benefit from that, but you're a sole proprietor. You're the sole
Right, but can I
owner.
also have a full-time W-2 job on top
Yeah.
of that?
Yeah.
Yeah.
Yeah, like, so my husband owns a training business. He clearly doesn't train me, but we're working on it. But anyhow, so he has a SEP, you know, and he also has a job.
And
a
there's
W-2 job.
no minimum requirements to
Like
for
income
activity
limitations.
in that business,
It has
right?
to be established, active, and in good standing.
That's it.
Mhm.
Oh,
So you can do to that. Also.
I think I have a business that qualifies.
Unless it goes under and you're in offices.
Yeah.
But does it look the same way, Tara?
Do what?
Whatever the amount is.
I think it's 69. I'm not feeling too hot, but so I'll double check, but it's 69. Thank you. Okay. All right. Perfect. Yes, 69,000.
Only do 69,000 for one business. If you have like.
Don't think of it as your businesses. Think of it as your IRA or your, you know, your retirement. And then when you have a solo K, it acts the same way, right? You're the sole owner of that 401k. They both have established EIN, US tax ID numbers, etc. All right. Oh, speaking of, so anyhow, same thing with the solo K. The difference with the solo K, you're not required to have a custodian. You can use this still. But you basically establish a solo 401k, you have planned documents, you have a corresponding bank account, and you can direct those solo K assets into various investments as well. You're responsible for engaging a tax professional, doing your filings, and things of that nature.
And is it true that that $69,000 contribution is deductible from your income?
It's retirement contributions. So there is some tax deductions you can have there for making any type of retirement
Right.
contribution.
So I got a job that I'm earning $100,000. I have my side business.
Mhm.
I contribute 69,000. How much of that comes off of my tax liability?
Well, that would be up to you and your tax professional, depending on
Okay.
brackets and things of that nature.
But it is taxed.
your
I mean,
filings,
I'm
mhm.
just thinking of a lot
Right,
of,
yeah.
we're just always looking for tax efficiency. right?
Absolutely, because who likes those?
Yeah, okay, thank you. But you can do 25, it's up to it's 25% or 69,000, whichever two is lower, you can deduct and use as that piece. There's limitations because you gotta look at it from you, the business owner, and as you, the individual who you're paying.
Right.
So there's a computation you gotta do on the tax
Okay.
thing, but it's only up to like 20% theoretically. It's not full 25% because of the way that you gotta do the math, but this is only fresh in my mind because I had to go down this rabbit hole in the last couple days.
I was like,
What's
is he in
the-
Texas? Yes, he is.
Yeah, well, it's 20% of the 25%.
Thank you. Glad you're here.
Yeah.
Seriously.
You have a tax professional look at all your.
That's,
Or ask
yeah, we
that-
just defer there all the time.
or ask that.
Yeah.
Or ask. All right, so on the self-directed piece, you can have what's called a direct custody IRA. That's just like going Schwab and holding your assets inside of it. Rocket Dollar, you can also open a Rocket Dollar account. We can make investments directly from the IRA. So when you log in, you see your assets. That's what Pause is doing. Or you can do like this checkbook control model, which some people love and some people hate. But anyhow, direct custody is just holding the investments directly inside of your IRA. When you do a checkbook structure, it just adds an entity. So Rocket Dollar uses a trust. Some people use a single member LLC. That basically creates a layer. A lot of people do it for a hedge of protection, just to put a layer between them and their custodian. But it's more popular if you're doing fix and flips and high transaction volume investing, and we can kind of dig into that later. Solo K, like I said, it acts kind of the same as the checkbook IRA because you are establishing, yeah. Do you want me to go back?
Yes, please.
Okay.
I read online and some people were saying that the checkbook IRA is illegal.
Is illegal?
Yes, there was some complication if you do the IRA.
Did you read the McNulty case? Was
yes,
it the McNulty case?
yeah.
Yeah.
It's very confusing, the information around it.
Yeah, so here's the deal. If you do this, you have to remember that your IRA or that your LLC or your trust, the business entity that you use as the conduit, right, is an IRA owned asset, which means that that asset still has to operate in the confines of what the IRS says an IRA can do. So I can't go buy a vacation property as an investment property and go stay in it half the year or at all myself. I can't do anything that's underneath the prohibited transaction guidelines. And so what you had with like the McNulty case specifically, precious metals investors. So if I hold precious metals inside of my IRA, I have to have a depository to store those metals at. Everything has to be at an arm's length. And so I can't have my gold bullion in a Maxwell House can in my basement behind, the furnace, right? Or dug it in a hole in my backyard. So you can't just it was pitched for a while called at home storage. Like that was like the big play by metals brokers, store your gold at home in case of the apocalypse. And so you just have to remember it's an IRA owned asset, and then that'll keep you out of trouble.
But you could, so going back to the precious metals example, if it was held by a custodian that's actually holding the metal, is that okay?
You mean if you're using the checkbook model?
Yeah.
So then you kind of negate the purpose of having the checkbook model because you would just have the metals held by your custodian at the depository.
But I'm writing the check to them to buy it,
broker?
hold it. Yeah.
You're not going to have access to your retirement dollars to write that check without a structure like this. Oh, you're saying, no, we wouldn't just hold it like a held away asset at the custodian. It's owned. The investor doesn't become, let me back up. So the investment is now an investment made by Sergio's trust, right? And so Sergio's trust is responsible for opening up an account at a depository to store your metals, or getting a PO box at the post office, or a bank safety deposit box to store it
So it's got to be held in that name.
at wherever,
Right. And that's okay.
not your basement. Yes.
Got it.
Okay. Makes sense. A
Yeah.
little bit better. It's not something that, so quick backstory. I've been in the self-directed space for 15 years. I wanted to be a concert venue manager when I grew up. So I'm not there yet. So I'm not grown up. But all of this was foreign to me. I never thought I'd really work in any financial area at all. The firm that I worked at, we would have never like even talked about or pitched the fact that you could do a checkbook IRA. Rocket Dollar, on the other hand, it's a product offering. They set up the trust. We have a partnership with Grasshopper Bank. So we set up your bank account. And so it's a little bit different to talk about all of this openly, because if you're not, it's not the best solution for a run-of-the-mill investor that doesn't understand the prohibited transaction guidelines and doesn't understand the parameters around a retirement account, because you'll just get the random person that's like, I'm going to pay my mortgage out of my LLC bank account this month, and you're going to completely disqualify your IRA. So Rocket Dollar talks about it openly, but most custodians kind of stay away from anything that could be misconstrued as giving investment.
What is the getting in trouble part for doing a lot of these things that are outside of the bounds? Is that just a kind of like IRS kind of a random audit type of thing, or how does somebody who has the checkbook control and uses that, or is that the responsibility of Rocket Dollar to say, are these people doing what they're supposed to be doing with this?
So Rocket Dollar, so we come into place where we're getting those annual valuations.
Okay.
We will always lean back on the prerogative that it is a self-directed IRA and you are ultimately the responsible party. That doesn't mean that custodians don't get drug into lawsuits and things all the time because of a mistake or something stupid that a client did inside of their IRA, right? But ultimately, it is up to the client. We don't have a fiduciary role, nor do we hold assets like on our balance sheet. Like once you've got it, like it's your responsibility. Good luck, don't muck it up. But we don't. I don't know how often the audits occur. I don't know how the IRS goes and looks at all that stuff, or Doge or whoever is going to do that now. But so I'm sure people do things they're not supposed to do all the time, but I don't know that I'd risk it, right? Okay, yes. How many do we have? On the Rocket Dollar side, they're probably 85% of the business. And on the digital trust side, I'd say probably, I don't know, 10%, maybe not as much, but Rocket Dollar, it's definitely a product that they offer. So a lot of custodians will say, go find your own, like your legal person, or you go get a cookie cutter thing off of the internet and find the company that sets them up or does them. But Rocket Dollar does it as a service, as a product offering, sets up those trusts. The reason Rocket Dollar uses a trust as opposed to a single member LLC, which is what you see predominantly, is simply because the LLCs require a state tax filing annually. And if you're in somewhere like California, it's a hefty amount. And the trust doesn't require that annual filing, but they both are still tax sheltered vehicles inside of your IRA that are kind of, it's not like a trust like your family's estate trust. It's a business investment trust. So, good there? Okay. Again, the checkbook control, most people just want to do that if they have a high transaction volume asset. That's like fix and flips. A lot of people do it to have crypto access at various exchanges. Although, if you want to do direct digital asset or crypto trading, we have other brands that you can just log into your IRA and trade crypto 24/7. That's Bitcoin IRA and Choice. And so that's holding physical, for lack of a better word, Bitcoin and other, I think it's 85 coins and tokens right now inside of your IRA. So you wouldn't have to necessarily go through this process. But if you want to trade at other places, or you want to do commodities or futures or anything like that, then you could open up a brokerage inside of a checkbook controlled IRA. Let's just kind of go over this slide. Prohibited transactions. This is important. Isn't this slide terrible? It's like nobody, but also some people. Yeah. So disqualified people. Here's the easy way to put it. anyone of linear descent to you and your spouse, disqualified, right? Everybody else qualified. Make sense? So, oh, and your in-laws. I'm personally not investing in anything with my mother-in-law. That woman is unhappy. But so if that makes sense. So anyone of linear descent is disqualified from you. That means if you own a rental property, your kid can't stay in it while they're in college. Or if you're going to invest in someone's business, like you have someone with a startup business, you could invest in your siblings or your cousins or your father-in-law, because they're usually nice, but you can't invest in, which to your point is what you wanted to talk about, is, investing in like kids' businesses and stuff. There's some limitations around that, or you just
Yeah,
can't even do it
think
at all.
to me, the opportunity here is that it's truly thinking outside the box.
Absolutely.
How we define wealth is really about is a lot of anchored in purpose. And an investment doesn't always have, I mean, obviously the goal when you're talking about a financial investment is to generate a return. If you see, you've got a niece, a nephew that has a great idea and is
Mhm.
looking for some seed capital and that kind of thing,
Yes.
obviously it's advisable to know how to structure an investment. But if that money gets vaporized and you supported somebody's effort to make it, that is more palatable than,
And just losing it in something else.
Yeah.
Yeah, absolutely. I'll give a personal example. I have a friend who wanted to open a motorcycle shop, but whatever. So I loaned him money out of my 401k, because we have self-directed 401ks. And I just gave him a small loan. We did it in the form of a promissory note. He paid me back over 5 years with, a percentage of interest. And that was that. And I made more off of that than had I put it into, some blue chip stock.
So, and along those lines, so it's probably, going back to the example I was using, a loan is probably the better vehicle to use there.
Mm-hmm.
We know that, I don't know if it's the eighth wonder of the world is leverage and financing. Private credit, obviously we have a fund, but private lending is bigger now than it ever was.
Right.
And that is because of the regulatory burden, the slowness of institutions and all of that.
Yeah.
So it absolutely is an option to facilitate somebody being able to implement whatever,
We have a longtime client, and he's written a book. This is not a plug for him, but it's called Be the Bank, and it's bethebank.com, and it talks all about, private lending and growing your wealth in that capacity. He has like everyone in his family has IRAs, all the way down to his 3-year-old grandson, Dave Steck. Yeah, no, super awesome guy. And so, but it's a great concept how to build generational wealth. I think he's 7 generations, like at this point, like he's built enough for like 7 generations, like past his grandson. And so he's done that all through Being the Bank, private lending. The company that I hail from, our CEO started just doing, we're in Western Kentucky, we're by the lakes area, and we have a ton of hunting property. A lot of people come from all over to do like whitetail deer hunting in the winter. And he just started with like land contracts and, little 5,000, 3,000, like small, and just grew and grew and grew. And so a lot you can do you can just do run of the mill stuff, but you can also get creative. Most of your alternative asset custodians are going to just, the way that they charge. So really, if you're at Fidelity or Schwab, there's just like this, minuscule amount you pay on trades and things of that nature. Most of your alternative asset custodians are going to charge an asset-based fee or a basis points model based on the value of your asset. And so expect that if you're looking at an alternative asset custodian, that there are custody fees involved. We get asked all the time, like, why am I paying for this? And it's like, well, I have children that we have to feed. So nonetheless, there are fees associated with that. Let's see. that's pretty much it, it's really much it, guys. On this PowerPoint, but I'm happy to talk through any specific investments that you've thought of or asset classes that you have questions about, or anything like that.
What, can you quickly walk through, so you got in here,
Sure.
talk
go
about maybe Haas.
How it works?
Since you've recently.
Well,
All right, so yeah, so I actually used Rocket Dollar very recently. So backstory about my assets, I was with a shall not be named custodian for 7 months. My story starts at Vanguard. So I have a very large sum of 401k and IRA money.
Here, come to the podium, Hawes. Let me take a seat for a second.
At Vanguard. So I actually had, so I have a Roth and I have a Roth and a traditional IRA at Vanguard. And I've been a traditional investor in the sense that I'm always invested in just the Vanguard funds, but I wanted to invest in the syndication. So my money was at Vanguard. So my story starts at Vanguard. And if anybody knows anything about Vanguard, it is low cost, no cost, low service, no service. One of those matrix and the matrix. So my money was it was with Vanguard, and I originally moved the money into a shall not be named custodian because I was trying to find a deal, not a self-storage deal, but a syndication deal for myself. So I wanted to put my own money in my own deal, which is why I sequestered the money out of Vanguard to put it into my own deal. But I had to move the money out of that back into Vanguard. So when I wanted to do this, what I did is I told Tara up front that I'm probably with the hardest custodian in the world. I'm willing to bet that Vanguard is probably the hardest custodian in the world to get money out of, because they don't want you to get your money out of them and to put it in a self-directed. They wanted to put it in their directed funds. So the way I did it was Tara helped me through the process. It was tedious and challenging, but we got it through with her help. And the way I did it is I fill out a form, because the way Vanguard works is they take a physical handwritten form, not typed. I learned that the hard way. You can't type it.
I know.
You have to handwrite the form. So it was a handwritten, so I had to handwrite the form and submit it to Tara and then do it that way. So Vanguard is just a bad example. But anyways, the process on the Rocket Dollar side, let's talk Rocket Dollar. It's not a pitch. This is not a paid testimonial because I'm actually paying them for this. So anyways, Rocket Dollar, the things I like about Rocket Dollar is this flat fee thing. They don't have the basis point model, and they have a very flat fee. So if you're making an investment and you want your dollar returns to go the farthest, the fees is what will kill you, because for the shall not be named custodian, I had $125,000 sitting with that custodian in my self-directed with no activity, and I paid $960 in fees for the year. Actually, it was for nine months. So, and I was just paying fees for the money to sit in there and do nothing. So there was no compliance, no monitoring, nothing, and I just paid the fees. But when it comes to Rocket, their fee structure is very clean. Their support people, when you open up a ticket with them. Now, because I like Tara, I go to Tara all the time. So when I was having my first problem with Vanguard, I blasted their ticket system and I went to Tara, but she just got back to me before the service ticket person did. But I think with Rocket, their system is very clean, and like Sergio says, he's a tech guy. I like tech guys particularly, and I've been in technology. So when it comes to the technology behind their product, I think people have to catch up to their standards, because they have the superior technology when it comes to processes. So the way I did it was my money was with Vanguard. I had to fill out a physical form, sign it, send it to Tara, and then what is it? What's it called?
After you filled out which form?
The desk, trade desk. What is it called? People that actually talk to Vanguard.
Oh, just our back office.
Yeah, it's okay. So then their back office or trade desk, whatever it is, worked with Vanguard.
Requires that we mailed them
Yes.
your paper documents.
Anyway, so
Right.
if you want the form, it's very boring. It's a very boring form, but she can help you with it if you're with Vanguard. If you're with Vanguard and you don't go through Rocket Dollar and you go to anybody else, you're gonna basically just find a rope.
So, all right, so you fill out the form,
yeah.
you get the
Let me go
form.
over high
and-
level it really fast.
Yeah.
Rocket Dollar, there's about 5 different companies of executives that have come together to do Rocket Dollar and Retired.com. So we hail from Equity Trust, Strata Trust, Kingdom Trust, and some other smaller custodians in the space. And the one thing that we've done is create a product or try to create a product that is everything that we received complaints about at the other firms or like didn't do well, whatever. So the fee is like a subscription fee like Netflix. If you move your account out, there's no closing cost. You just move it and the subscription fee stops. But to open an account, you log in to the rocketdollar.com website, you put in your phone number, it sends you a code, you follow the thing. It's about 5 minutes to set up the account online. From there, everything you can do from your dashboard. So you would log into your dashboard and click the fund button. If you're at anywhere like TD Schwab, any of the big shops, we ACAT. And so once you complete that online piece, when you click fund, we're just going to submit an ACAT out to the releasing custodian.
What's an ACAT?
It's an electronic funds transfer. It's not like,
OACH?
well, it's where a financial institution pulls money, like requests to
got
pull
you.
money
Okay.
from another place. And it's called an ACAT, sorry. And then your funds come in and you don't have to wait for the funds to come in to go ahead and click the invest button, but you can. But when you click the invest button, you're going to upload any of your documents. So if you're doing one of Sergio's funds, you would just upload the documents you got from him, complete our it's called a direction of investment form. It says I want to invest, X amount of dollars into this, and you submit that, and then that process is out within 2 to 3 days. So takes a day to open an account. Depending on your releasing custodian, Vanguard could take a month. TD takes 2 to 3 days, and then the investment 2 to 3 days. And so if you do the checkbook model layered into that, you're looking at kind of 7 to 10 days, because we do have to establish the trust, establish the bank account, and then we sweep the funds once they come in from your current custodian to your checkbook IRA's bank account. We don't have access to that bank account at that point. You have the funds and you're in charge from there. So it's pretty clean cut and straightforward. That's the Rocket Dollar piece. Like I said, we have a few other brands. If you had other investments like that might be a better fit for you.
If you wanted to do the kind of the private lending scenario, that does require the checkbook control, or does not? No?
It does not. It might make it easier if you're doing that often, but if you can just have the direct custody model and you do the same thing, you click invest, you're going to upload a copy of the promissory note. And that is literally something that you can just type up yourself. It just has to say, who's the lender, who's the borrower, and the return schedule, the payment schedule.
Right.
And then you would just upload that.
And your job is not to analyze whether
We do look at investments to make sure they are administratively feasible for us to hold. We're federal, like we have to think federal, national, like underneath the Fed, or federally. So cannabis, we're not going to hold cannabis. It can't be a gambling type of investment. So as long as it's not like cannabis or gambling,
are they part of the restrictions, or this is Rocket Dollar?
So it's definitely part of the restrictions. And so we're making sure that you're not unknowingly entering into a prohibited transaction.
Got it.
But we are not going to, from a fiduciary perspective, say, this is a terrible idea, or this is a good idea. That onus falls on the investor.
So I'm going to walk through a real scenario, or possible scenario on just to give some real context. I meet so-and-so that's got a great business idea at a local farmer's market, and I see a line wrapping around the farmer's market and it says, hey, this person is doing very well.
Mm.
I walk up to them and say, are you, what's your business plan? What are you looking to do? Well, I'm looking to buy some more equipment so I can scale this thing, so on and so forth.
Mhm.
You say, okay, you maybe looking for some investor dollars. Sure. Okay, I'll give you a loan. All right. obviously you do some due diligence, you trust the business, you like it and everything. You go on the Chat GPT, say, hey, write me a note. I'm going to charge this guy 10%. It's a 3-year term, XYZ. I get my document. He agrees to it, looks at it. I did everything I need to do with Rocket Dollar. I established my account. I upload my note there.
Mhm.
Then on that note, it's got his information. Does it send him a check? How do I facilitate getting the money to that
So,
person?
right, so along with uploading your investment documents, we have a direction of investment form. And that direction of investment form, you fill out basically and sign electronically when you're doing the invest tab. But it basically says, Sergio, my account number at Rocket Dollar is this. Here's my demographic, my address, whatever. And then it says I'm investing in, Polly's pickle stand, because we literally have one and they are legit pickles. They're very good. Anyways, and Polly's pickle stand for $25,000. Here's the bank wire information to Polly, and then you sign it. And then that's the instruction that tells our back office to send a check or wire to Polly, right? And so it's that direction of investment form. That's our instructions as the custodian from you to move money out of your account.
And then from there, it's really any funds from that transaction, loan payments, Polly's pickle stand. has to
We
write
also
their
would provide
interest.
her in that documentation, like she'll get a copy of, you'll provide her as the investor, our delivery instructions. So your payments need to be made into Digital Trust FBO Sergio's IRA, right? And here's their delivery information, whether it's check or ACH or wire, and how to get it there.
So she writes the check out, she
Mhm.
puts the right information, hands it to me, then what?
You forward it to us.
Okay, do you have like mobile check deposit on the app or
No, that
something?
doesn't exist yet because most people still aren't writing
So
checks.
then we send it to.
You mail it to Digital Trust Vegas
And that's
office.
it, and then,
Mhm.
in my Rocket Dollar portal, if you will, I can see the balance.
You'll see that money came in. And so then you have cash sitting, right? Because now you've had returns come in on your investment. So you can direct that cash into other investments. You can put it into, we do have relationships with Schwab Matrix, IB, and Fifth Third. So we do have a trade desk. We're working on layering our trade technology for the other brands into Rocket Dollar. So you would just be able to trade. But you can, we have Rocket Dollar clients now that will put their cash in like a Vanguard ETF or a money market or
While
something
the
like
money
that.
is dormant, you want.
But
it to
we're
earn.
not going to do that on our own on your behalf.
Right.
You have to instruct us to do
So,
that.
so it's advisable then is you either should have the investment lined up, so you don't just send cash and it's sitting there.
Unless we're going to mobilize it into a money market or
wa-
something like that.
Right. Do
Right.
you have like dormant or idle cash investment options that you are affiliated with through Grasshopper or something like that? Or is that completely up to the individual?
So it's completely up to you as long as we can hold it. So between IB, Fifth Third, most people will just do like a Vanguard money market or something like that. We have like a short list, like here's some options that we would send out. It's not, because it's not a sleek process on the Rocket Dollar front right now. Like you can't just log in and trade. I'm hoping that's a Q3 thing. But nonetheless, I would probably just spearhead our team, our back office to execute. We have kind of like what's called a trade template. For example, I have a real estate fund that their real estate investors come through us, but they need their investors' money to be at Rocket Dollar when they get a real estate deal because it has to fund within days, right? So it wasn't conducive for their clients to have money just sit with us and not earn any type of yield at all. So we have, for them as a larger firm, created a way for them to have a recurring money market anytime, because they do monthly dividends back. So anytime money comes into those accounts, our team does automate putting that into a Vanguard money market.
Okay, so theoretically, what I would want to do is I want to get my funds ready to invest. Maybe if I have my investment identified, then it's a 2-step process, get the money to Rocket Dollar and then deployed.
Right.
If not, then I want to have my idle investment, i.e. open up my Rocket Dollar account, fund there, and then maybe have, and I've actually done this, I have a Coinbase account
Mm-hmm,
with my self-directed IRA
mm-hmm.
that I can actually invest in crypto, stable coin, whatever, a semi or fully liquid type of investment
Right.
where it's going to earn no matter what,
Right.
and then I can deploy.
Yes.
And
So the biggest thing to keep in mind is like, if you are at a custodian that it's going to take 30 days to get your funds out of, if you have a deadline or a timeline for your investment, obviously that's just something to consider in how you put funds into your Rocket Dollar account or whatever account you're going to use.
Can you talk about your fee structure?
Okay, we'll talk about it. I don't like to talk about it. So basically, we have two types of accounts, silver and gold. Silver just being direct custody. Like that's just a regular IRA, right? That we're going to make investments out of on your behalf. Gold is solo K or checkbook control. This is a one-time setup fee. However, we do have a code. I think it's Hearthfire or Hearthfire VIP. Yeah. That takes 360 off, right? So that makes a direct custody account, no setup, and a gold 240. Then from there, it's $30. $30 a month billed to your card. We don't deduct from the cash in the account. It's literally like Netflix, just builds to your card. It's $360 a year. And that includes, it doesn't matter if you do 100 investments or one, $1 million or 1,000, it's $30. And then when you transfer out, I think they do charge it's just $50 account closure fee for the administrative side of it, but that's it. Most places are per asset. Go ahead. We are unrelated.
Okay.
But they do exactly like what we do.
Okay.
Yeah. And then one thing to note is when you have the gold account and you have the corresponding bank account. So we're partnered with Grasshopper Bank. And so think about wire fees when you make an investment. I think they include 4 free wires a year. So anything outside of that, they do like any normal bank have a wire fee when you make your investment. So there's that to consider. But outside of that, just base level custody and setup, that's the fee. There's no other ancillary charges with Rocket Dollar.
There's like, so one question I have. So if someone has an investment and so say if I have money and sitting in an account and it's idle, right? And I say, let's go write some realty income covered calls, right? Like your option strategy. So if you want to write options on the account, I would have to go to Schwab, open up an IRA account, a traditional or a Roth IRA account at Schwab, have the money custody with you, and then send the money to Schwab, right? Or you would send the monny to Schwab,
What's it, Schwab?
like
What
the
are
IRA.
those?
Because
money.
the actual trading, the actual options, I can go into the Schwab portal and buy and sell options, right? The
Yes.
money's sitting idle.
Yes.
So I would have to open up the account at Schwab, right? And then send you the money, and then you would send the money to Schwab. So every time the trade goes through and the money
Yeah,
moves.
that would get really convoluted. And so that's a proper use case as to why somebody would have a checkbook control account, because then you would open up a trading account in the name of your trust at Schwab and trade over there. And then you're just moving money like between Grasshopper and Rocket Dollar. You know, it's basically holding a brokerage. Like we have people that might hold like a E-Trade account inside their IRA so they can do all.
let me ask you this. What's the process to transfer from one self-directed IRA? So I've got funds in one, or I know of an investor that has funds with one SD IRA platform and they're not happy, but the money is deployed.
That's fine. Okay, so it's just basically what's called an in-kind transfer. So you fill out IRA to IRA transfer paperwork, which we have a form. We would submit that form to the releasing custodian, the current custodian, and they're going to just re-register that LLC asset. It's that right? If they have a self-directed and they've done it with a single member LLC, right?
Mhm.
Then they're releasing that private equity asset to us. So they're saying, we're no longer going to hold it in XYZ custodian. It isn't, we're releasing it to Digital Trust for benefit of client name. And then we re-register the titling of that asset to the new custodian. It's called an in-kind transfer. And you can do that with any alternative asset. You don't have to liquidate it to move it. It's just retitling it properly.
Any of you guys have any questions?
Lovely, wonderful. Have a great day.
Yeah, I think
No, I
it's,
appreciate
it's,
it. You
it's
were good.
really, I mean, I've come away with, I've got a page full of notes on things that I need to follow up and do, certainly definitely, educational, so. All right, so I'm gonna kind of wrap this up real quick, so, if you're watching
Oh,
this.
my screen's full.
If you're watching the recording, thanks for joining us. Please note that however this is sent out, there will be some additional information to get a hold of Tara,
Absolutely.
Rocket Dollar, anything on our end. Obviously, you know, one of the reasons why we did this is we've got, I think, something like 30 or 40% of our investors have investments through in our funds and storage properties through a self-directed account. So it's worthwhile. We know that there's broader use and potential here, and this is not just self-serving to say, hey, transfer money and come into our deals, but look at this and explore this personally. So
No.
Tara, thank you so much for
Thank
making
you. I
the trek
appreciate it.
down. Thank you, everybody, for joining us. If there's any other topics, like some of the things that we're looking to do is maybe around 1031 exchanges, you have personal investments, tax strategies, estate planning. We've got lots of things on the agenda. If there's any specific topic that you would like to see, then please let Terry, myself, or anybody on our team know, and we're happy to put something together and enjoy the rest of your day.
I appreciate it.